Top of this range comes in at 65. Yesterday's low comes in at 70. And then we've held 72. So every test of yesterday's low have held at 72. So that again becomes a reasonably clear point. You could say anyone short in this area here is going to have their stops above 65 and very likely back inside yesterday's range. We then start to trickle higher, and what gives you a little clue here, and this is something to be watching out for, delta then starts to build as we start to pick up through this area. Little build of delta on these couple of candles, and this shows up very nicely when I show you the price ladder of it. Then you get that surge higher, and because you're expecting this, you can actually start thinking about, well, what happened last time and where could I put some orders so that on that rush up you can get filled on those offers and take the fast money back down. So two ways of playing it. Either you're looking for an entry as delta builds, or you're looking for the potential to sell this on that rush higher. Area to sell, be looking at initial balance low. So the initial balance isn't necessarily the trigger point. It was on Monday, it wasn't today. It's all about just establishing that point where people will give up. Initial balance low comes in at 16, 17 area. We've also got a little bit of peak of volume around 10, so perhaps that's where you could have your orders. You know, when you're trying to play an order expecting a stop to hit you, then you have to accept it's likely to go through there. So a little bit of play in where those orders are does make sense. Too precise and you can miss the trade, which incidentally is what happened to me earlier. Missed the trade by half a tick. Something that I'm going to be putting down in my debrief to learn, spread your orders a little bit. Give yourself, if you're playing a stop to get in, give yourself that little bit of leeway. But this move on the break above 72s, you're looking around about 40 ticks. Very similar move to the one that we saw on Monday as well. So that's where you could place those orders. Now we're going to have a look at the price action. This gives you a little bit further clue as to how exactly it trades and what you can be looking for. So this is the DAX going into the move. What we're doing here, putting a couple of orders, you can see that little bit of volume up here, and that's 10's just ahead of the initial balance, and then you got further offers up towards that initial balance low. So we're now trading just around these couple of candles just down here. We've had a pullback to 62, that's the low of these few candles. We did just see a little increase in energy, and this is what you're watching out for. You could be by now quite aware, and you're thinking, right, through 72, we've got this low volume up above. If we start trading through 72, then there's potential to then have this drive and a stop run just like we saw on Monday. So I'm not suggesting that you have to try and play it to the upside and try and play for the stops every time, but it is starting to show itself as an opportunity now. So we're getting into this area, this little zone here, 65 to 72s. There you go, very quick surge of energy. That's that first little kick up in delta. Takes you to 72s, previous day's low. Again, no selling. And this is the important thing here. If you were looking for a short, you'd be happy with the jump to 72. Yesterday's low, you think, right, I can get a short on here. What you'd want to see though is it start trading back down very, very quickly from there. Absorb a bit, hold, and move back down. What we're seeing is actually, as soon as we got above 72, never getting back below 72. This is where now anyone short or anyone who's just sold it is thinking, I'm not happy about this. Where am I going to put my stop? Should I get out of this trade? So the first people who start to get out do manage to escape the squeeze, but they're the ones that start the buying. You've now got this 50 lot. a lot of people are going to be looking at that thinking, I can hit that to get out. So if I'm short 72s, I'm going to put my stops above the 50 lot into this low volume area, and I'll hit that to get out. Meaning that that 50 lot gets taken very, very quickly. So we've seen that increase in delta, we've seen the energy pick up. We're now in an area where we're thinking, right, stops really could start coming out now. So we'll watch how this trades. Again, you see every little kick back, not rushing down. There we go. Takes that 50. Further stops go off. Now you're looking at this thinking this move down here, it's a poor move down. So with these poor moves down, they're quite easy to trade all the way back through. So yes, we're trading 90s, mid 90s. There's not a great deal to stop you here. So you can still be thinking this initial balance low is still a good place to be looking for a short. Rushes up again, gets you out. Final rush up to 14s. That first pullback was 08. So this is key now. If you've got this short on, we need to see the market back below 08s. If we get below 08s, and then we start coming back off. If you're playing the catch in the stops move, so the very quick rush up, sell it move, what you're looking for generally on this is after you pull back, slowing down in price action. Once the energy starts to dissipate, you can see it here around double O's. Energy's dropping off, certainly compared to the rush move. Energy's still reasonably high, but compared to that first charge up, energy's dipped off. That's where you can start exiting the trade. So what I'm trying to get at here is look at the energy as it comes up. Even if you weren't thinking I want to go long here and you were thinking, yep, yesterday's low, I fancy a short. The fact that it had such a push of energy through yesterday's low and did not trade back to it at all gives you a pretty quick clue that it's probably not going to play out the way you were thinking.